Hi traders, welcome to this week's pre-week market review by Trade Genius. We are looking at the geopolitical tension at the moment and the impact it's having on the major FX pairs. Let's look at last week's market. Before we run you through it, just to quickly give you a recap, 2 weeks back, profit takers were cutting short their buy positions on the dollar, and last week we saw the reverse happening with everyone jumping straight back on those buy dollar positions amidst all of the market tension, specifically between Russia and the Ukraine, and also over in the Middle East with the US, and also in the Gulf between Iraq. And basically this has given rise to people buying the dollar once again and the Japanese yen as those safe haven pairs. So without further ado, let's look at some of these technical charts together with the fundamentals. Here we have the US dollar JPY daily chart, and the range is now actually broken above 102.80, 103 levels, even higher now to 104 resistances. You can see here the previous range by these arrows, and the recent touch there at 104. I'm just going to highlight the level at 104 that we used to see back in April. There it is. And I should just mention here also that the RSI indicator is showing you that we are well overbought now above the 70 level. So you could expect some pullbacks there to the downside, certainly in the short term, maybe early this week, possibly into the middle of the week too. Longer term trend is still undefined, so we're going to move over now to the US Dollar Cad, which has a very strong bullish chart here on a weekly level. We see here a megaphone technical pattern. You can see that the megaphone is showing you that there are wider gaps between the buyers and the sellers, and this has been really dating back now all the way since 2012, where we moved from below to above parity levels, that is above $1 on the USD CAD, and you can see that nicely here. We do have potential to continue this uptrend. We are in the middle of the Bollinger Band, and maybe in the short term, if we don't see any clarity, you should just keep on buying that trend. Euro dollar on the daily level, we're now going to look at this oversold pair. Although the long term does offer further sell-offs, the short term seems to be pushing us further and further towards a desperate need for pullbacks there. We saw it oversold last week, we didn't get the pullback, and now we're seeing a daily candle sitting completely outside the lower Bollinger Band level. That's the -2 standard deviation, which often gives us a fairly strong hint for a pullback, certainly towards the previous resistance levels, which are about 100 pips above this trend, around about 133.50. So you can look forward to that this week, and obviously longer term, there is a lot of news to support stronger dollars in coming months. Okay guys, I would warn you, we're still in August, so don't go too aggressive on your trades at the moment, because there is rather thin liquidity in the markets, not a lot of volume, and obviously it's a bit choppy because of that. You might want to wait just a week or two. Once we have September underway, a lot of volume joining the markets again, a lot more clarity to trends, and so nonetheless, there is data coming out on Thursday specifically this week, which will affect these US positions with preliminary GDP and unemployment rates, and I have to mention Tuesday, of course, with that consumer confidence. So have a great week, guys, and trade safe.